Hello, in this video I will show you how to do yield farming for crypto to earn passive income. So today I'm going to take you to the exciting world of yield farming. If you have been looking for a way to earn passive income using the cryptocurrency, this guide is going to be just for you. So we will break down everything step by step, from identifying right assets to setting up for the first yield farm. So by the end of this tutorial, you will feel confident about diving into the processes yourself. So let's get started. Now, firstly, what is yield farming? Yield farming is essentially a method to earn rewards on your existing cryptocurrency holdings by providing liquidity to decentralized finance or DeFi platforms. These platforms rely on liquidity pools, basically collections of funds that enable trading and other DeFi activities. So in return for collaborating your assets to these pools, you will earn a share of the platform's reward for distribution in the form of cryptocurrency token. So it's like earning interest on your savings account, but instead of traditional bank, you are working with a blockchain provider protocol. Now, the rewards can be significantly higher than traditional finances, but there is also unique risk, which we will discuss in the video later. Now, the first step is you have to identify the right asset. So in yield farming, the important thing is deciding which assets you want to use. Most of you probably already have few cryptocurrency in your wallets. If that's the case, great. You are already ahead of the curve. But if you are new to crypto or looking to diversify your portfolio, I recommend starting by doing some research. So one of my favorite tools for this is CoinGecko. CoinGecko is a comprehensive platform where you can browse through different cryptocurrencies, check their performance over time, and even read the fundamentals for each token. This is where I start when I am scouting for promising tokens. So for instance, let's talk about a token. I've been tracking a token for some time now, which is Overnight Finance Token, or OVN. Now, keep in mind, this isn't a financial advice. I am not saying you should buy this particular token specifically. It's just an example to illustrate the process. So here is how I analyze a token like OVN. There are two metrics that you should keep in mind: performance trend and historical data. So in performance trends, I look at its performance over different time frames. So over the past year, OVN has more than double in value despite market downtime. This kind of resilience always catches my eye. Now, the second is historical data. On the other hand, it's important to note price volatility. For instance, OVN's price peaked at nearly $100 in April, but has since waived. Understanding these patterns help me make informed decisions. Now, once you've identified a token or tokens that you believe in and understand, it's time to move to the next step, which is researching yield farming for opportunities. So with your chosen assets in mind, you have to now start exploring yield farm opportunities. There are several platforms and tools that can help you do that. But two of my go-to options are DeFi Llama and VFed tool. So first in DeFi Llama, this website offers a wealth of information about different yield farming platforms, including their available pools and annual percentage yields. You can search for your token, for example OVN, and instantly see where you can start farming. The second tool is VFAT tool, another fantastic resource that provides detailed insight into farming opportunities. It also displays the APYs and APRs, annual percentage rate, helping you compare options effectively. Now, when browsing these platforms, I look for pools with high APY. The higher APY, the better the potential return. The next is reliable liquidity. A pool with a higher total value logged, or TVL, is generally more secure because it indicates confidence for other investors. Like for example, if I were to search OVN on this particular platform, I might find a pool like OVN to USD Plus with an APY of over 160%. This is the kind of opportunity I'd consider diving into deeper. Now, Once you have done that, the next step or the third step is evaluating platforms and risks. So once you have identified the potential farming opportunity, it's crucial to evaluate the platform hosting them. So DeFi platforms can vary widely in terms of security, reliability, and profitability. Here is what you have to look for. There are three things: reputation, liquidity levels, and platform features. So first, in reputation, has the platform been around for a while? Are there positive reviews and feedbacks from other users? Then in liquidity level, higher LTV generally means lower risks. So for instance, a pool with 5 million in liquidity is far more stable than one with only $50,000. Lastly, in platform features, some platform offers automated compounding, which can significantly enhance returns. So just look for these things when you will search for a platform. Now, the fourth step is understanding the tokens involved. So before committing to a liquidity pool, it's essential to understand the tokens you're working with. So for example, USD Plus. In our OVM example, USD Plus is a stable coin backed by other stable coins like USDC and DIA. It's designed to earn yields itself by developing its reserve into other income generating strategies. So now you must be wondering, why is this important? So knowing the mechanics of USD Plus helps me access the overall stability and risk of the pool. For instance, USD Plus might offer consistent daily APY, but that yield can fluctuate based on its underlying strategies. Now the fifth step is going to be setting up your yield farming position. Now once you have done with the research, the next thing that you have to do is you have to choose your platform, and then you have to deposit your assets. Then you have to monitor your returns. So firstly, you can use platforms like Aerodrome, Beefy Finance, and Extra Finance. These are all popular choices. Each of them have its unique features such as leverage options and auto compounding. Now after that, the next thing that you have to do is you have to deposit assets. So let's say, for example, I want to deposit $1,000 worth of USD Plus on a platform like Extra Finance. And I could also leverage, which allows me to amplify my position, but leverage adds risk. So it's not for everyone. So keep that in mind. Now, lastly, after doing all of that, it's time to monitor the returns. So over time, you will earn rewards in the form of additional tokens. The platform may display these as APYs or APRs. So remember, APY assumes compounding over a year. So it's always higher than APR. And lastly, it's time to monitor and adjust your position. So the cryptocurrency markets are highly dynamic, and so it's yield farming. So and APYs can fluctuate due to charges in TVL or market condition. For instance, if more people join a pool, the APY may decrease because rewards are distributed among a large group of participants. So here is what I'll do. Regularly check APY. So you can use tools like DeFi Llama, or the platform itself will show you how your pool's APY is performing. Then reallocate your funds. So for example, if I find a better opportunity elsewhere, I may choose to withdraw from my current pool and reinvest in that next pool. Lastly, let me tell you about the risks of yield farming. So yield farming may offer exciting opportunities. It's not without its risk. There are three major factors that you should keep in mind, which is impermanent loss, smart contract vulnerability, and market volatility. So it occurs when the value of your deposits token changes relative to when you entered the pool. It's an inherent risk in the liquidity farming. And always ensure the platform's smart contract have been audited. And lastly, cryptocurrency price can swing dramatically, affecting your overall returns. So make sure to keep that in mind as well. And in the end, yield farming can be an excellent way to put your cryptocurrency to work, generating passive income even in volatile market. But remember, due diligence is key. Always research the asset, platform, and risk involved. Start small, diversify your positions, and monitor your investments closely. So that's it. And if this video was helpful, please consider subscribing and liking the video.